Sitting with Nick Pakulla, my recommended lender. This video, we're going to talk about mortgage insurance. A lot of what we talk about, if you've looked at the VA, FHA, conventional videos, a lot of talk about mortgage insurance. So this answers the question, what is it? What is mortgage insurance? Why am I paying insurance on something? What does that insurance go towards?
Yeah, sure. A lot of home buyers actually think mortgage insurance protects them. Just be careful. It's not really there to protect you. It actually protects the bank. The bank's the one lending you money on your house, and you're not meeting the down payment requirements to have no mortgage insurance, so the mortgage insurance does protect the bank.
That being said, a bank says if you put X amount of money down,
Yep.
I don't need insurance anymore because I feel confident in you, in the asset that we're buying, that there's enough equity in it that I can.
Yeah, banks,
you don't make one payment, I'm going to be able to sell it and still get my money back.
Right.
All right.
So
and if I don't have that confidence, then I'm going to charge you on a monthly basis to make sure that I'm covered as a bank. Got it.
So banks during the loan process will go out and do an appraisal. Typically, an appraiser that the bank trusts to value a home will go out and say, hey, your home's worth X. And the general rule of thumb for all conventional loans is 20% down. You don't need any mortgage insurance. That basically means that at 20%, if you take, say, $400,000 home, you put 20% down, the bank's only lending $320,000. So A, you have some skin in the game. B, if something were to happen, the bank could turn around and sell the house and not lose any principal on their loan. So mortgage insurance does depend on what type of loan product you're in. FHA, we were talking about in a previous video, has Federal Housing Administration fixed mortgage insurance. There's only one source to get that, and that's through FHA. Conventional, on the other hand, has...
And that never goes away, by the way.
And conventional, on the other hand, has mortgage insurance as well, but there's a bunch of different companies that provide mortgage insurance, so there's ways to structure it where you're not necessarily paying it every month. It could be built into your rate.
One thing you mentioned before, with it being built into your rate, you can write it off on your taxes, right? Because it just looks like interest.
Consult with your tax advisor on your specific
but
case.
It looks like interest, so therefore it can just be written off.
Correct.
Whereas if it is a separate line item on your mortgage every month, and there's a mortgage insurance of $200 a month, you can't do anything with that.
Correct.
That is wasted money that you can't write off or do anything with at the end of the year, right?
Every year there's a bill that the mortgage insurance thing is sitting on, and every year it expires, and sometime in January they might retroactively do it, but we're right now in February 2018. As of now, the mortgage insurance, if you paid any last year, is not tax deductible for anybody. Even with tax laws changing, that's still currently in case.
Disclaimer, speak with your tax advisor, not us. We're not tax advisors, but that's what we know.
There are some benefits building it into the rate, because then it shows up as interest instead of mortgage insurance, which isn't technically tax deductible.
Which is just wasted money.
Right.
Doesn't go against our principal. Isn't something that we can write off later.
Correct.
It is just lighting fire to $200 a month.
Right. Okay. And so FHA, 3.5% down minimum. You have mortgage insurance. Currently, it stays for the life of the loan. Factors are set. Currently, the factor is 0.85%. Conventional loans have mortgage insurance with less than 20% down, and that will fall off eventually, which is if you do monthly, which is a nice perk of doing conventional loans. If you're going to keep the home long enough, your lender can do an analysis of which type of mortgage insurance do we want to build it into the rate, or are we going to stay there long enough where the monthly mortgage insurance is going to actually pay off in the long run, because eventually it's going to drop off, and then you're going to be saving money over the remaining time you're in the home.
Got it. So run your numbers based on on the length of time you think you're going to be in that home.
Yep.
So when you go and talk to your lender, you're not just running numbers to say what's my mortgage payment and how much do I need to settle at the end of the day.
Yep.
You kind of want to look at this thing long term, especially if there's mortgage insurance involved, and figure out what's the best way to incorporate that insurance.
Correct.
Okay. Cool.
So again, mortgage insurance protects the bank, and it's not a bad thing that you pay it. It's a great way to get into a house. Instead of waiting 5 or 10 years to save up 20% down, you can get into a house tomorrow with 3% down, for example, with conventional loans. So
So it's a necessary evil.
Right.
If you want to get into a home now, you don't have 20% down, it's a necessary evil.
Correct.
But you can have a plan to get rid of it.
And we can come up with the best strategy. You know, in some cases, FHA makes the most sense for certain buyers, or, you know, conventional, you have your options open. And it's always important to kind of check your main options and see what makes the most sense.
Great. That's what mortgage insurance is. If you can help it, don't get it. Sometimes there's nothing you can do. And we will, maybe one of the videos we'll do is talk about saving money to be able to have that 20% down versus the 5% or the 3% buying a home this year. And does it make sense to buy now, or does it make sense to wait and save that money?
Right.
That's mortgage insurance.